There are now absolutely no reasons for chaotic actions.
I consider it necessary to take a long overdue decision to immediately recognize the independence and sovereignty of Donetsk's People's Republic and Luhansk's People's Republic.
Just now, my Russian counterpart made assertions without evidence that demonstrate their efforts to create a pretext for conflict.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London, standing in for Francine Lacqua. And here is what's coming up on today's programme. President Putin recognises two breakaway republics in eastern Ukraine. US and European leaders condemn the move and talk turns to sanctions. Stocks slide on the latest escalation over Ukraine. Investors seek the safety of sovereign bonds and gold. Energy prices surge on Ukraine. European natural gas leads gains in commodities. Brent crude tests $99 a barrel. Let's check in then on these market moves. A significant escalation by Vladimir Putin and acute risk in these markets. The debate is not about where to hide or if to hide. The debate is about exactly where to hide. Do you want the Swissy? Do you want the yen? Do you want gold? Or do you want to be in treasuries? Let's check in then on the market reaction. Your European stock 600, after closing lower by 1.3% yesterday, is currently lower by 0.5%. The futures stateside pointed to losses of more than 1%. Don't forget, US equity markets and treasuries were closed yesterday for President's Day, so a bit of catch-up there for US stocks. The 10-year is currently at 189. Yields are lower by 3 basis points, coming off a little bit in terms of the move into treasuries. Just an hour ago or so, yields were higher by about 6 basis points. Brent is at $98 a barrel. $98 a barrel. You're looking potentially getting to $100 a barrel. We've already touched $99 just in the last few minutes, up 3.6%. If you get to $100, that's the first time since 2014. Of course, it's the geopolitical risk that is feeding into that price move. So let's have a look at how things are playing out across the asset space in Russia then. As we await sanctions from the European Commission, those are expected later today. The US put in sanctions yesterday around investing in 2 of those territories. So Russian stocks down almost more than 15% in the last 2 days. Sberbank, as a monitor of the impact on the financial sector there, as Russia braces for those potential additional sanctions, down 24% in the last 2 days. The ruble remains under pressure, crossing through 80. And your Russian 10-year yield has just soared on the back of this risk. OK, President Vladimir Putin announces that he is recognizing 2 self-proclaimed separatist republics in eastern Ukraine in what is seen as an escalation in Russia's standoff with the West.
I consider it necessary to take a long overdue decision to immediately recognize the independence and sovereignty of Donetsk's People's Republic and Luhansk's People's Republic. I'm asking the Federal Assembly of the Russian Federation to support this decision and then rectify treaties of friendship and mutual assistance with both republics. We demand for those who took over and retained the power in Kyiv to immediately stop combat activity. Otherwise, the responsibility for continuing the bloodshed will lay on the shoulders of the Ukrainian regime.
Volodymyr Zelensky, meanwhile, says Russia's decree undermines peace. In a late-night address to the nation, the Ukrainian president says the country will continue seeking peaceful and diplomatic solutions.
There are now absolutely no reasons for chaotic actions. We'll do everything to keep it this way in the future. We'll stick with the peaceful and diplomatic way. We'll only walk this way. We are on our land, and we are not afraid of anything and anyone. We don't owe anything to anyone. We won't give away anything to anyone. We are confident in this.
OK, let's get more on this then. In Moscow, we've got Bloomberg's editor Jake Rudnitsky. In Brussels, we have our Europe correspondent Maria Tadeo. Let's start in Moscow then. Jake, what is Putin's end goal here? Do we have any clarity that has emerged on the result of this decision over the last 24 hours?
Well, you know, Putin gave an hour-long rant yesterday explaining why he was doing this and why he needed to recognize these republics. It's not just recognition. They're also they also opened the door to sending in Russian troops into these separatist republics. Zelensky mentioned, the president of Ukraine mentioned that diplomacy is still on the table and they want to find a diplomatic means. But that obviously got much harder. Russia has basically thrown out the truce that they had, the Minsk agreements. And now what the next stage of diplomacy is going to mean is anybody's guess. The foreign minister, Lavrov, is scheduled to meet U.S. Secretary of State Blinken on Thursday. But those are going to be some pretty tense meetings, and I don't think it's hard to imagine any sort of de-escalation at the current time.
OK, so that Thursday meeting is still on the schedule, at least for now. Maria, what has the reaction been in Europe, then, as we await clarity on potential sanctions?
Yes, Tom, and just to pick up on that point, here European officials also saw that speech as a rant, as a monologue. They said, that they were horrified by the language, this idea that Vladimir Putin talked about a Ukraine that did not exist as a nation state, that this is an invention, a falsehood by the West. And also that line when he said, we created Ukraine, it was Bolshevik Russia that did this. A lot of this, of course, they say now points to a man who perhaps is not even operating in the same reality the Western officials are, and who is also at this point not looking for de-escalation. That's not the kind of language that you want to see for de-escalation. Now, in terms of sanctions, what we know is that there is a meeting now, Tom, underway here in Brussels. There's also another meeting that is going to take place in Paris, and at that point there will be a decision made on sanctions. Now, the big question, of course, is who is going to get sanctioned for this? How hard is the European Union going to hit Russia? And of course, I have to say, as always, unanimity is not a given, and the reason for this is that when you look at what Vladimir Putin did yesterday, he signed a decree that says, I recognize two independent republics, but they're not part of the Russian Federation. Yes, he is sending troops, but at this point, in the eyes of the European Union, this is just more of the same of what we've seen in the past 8 years. The war there has been ongoing for 8 years. So you could see, once again, tensions between the Western European countries, very dependent on Russian gas, and the Eastern Europeans that say we need to hit Russia with sanctions today from the get-go.
OK, Maria, today on the ground in Brussels, monitoring the impact, of course, and the reaction from European leaders and ministers to this latest move by Vladimir Putin. Thank you for that. And thank you, of course, to Bloomberg's Jake Rudnitsky in Moscow on the ground for us there. Let's analyse then the market impact with our markets editor, Christine Aquino. Christine, we talked about the move into havens, whether it's the yen or the Swissy or gold. Oil, of course, closing in to $99 a barrel. Where are we in the market pricing of this geopolitical risk?
Well, Tom, it is very widespread. As you mentioned, everything that is potentially a haven is just really in demand today. And that just really speaks to how pervasive these tensions are and the impact of it on the global scale. And we're definitely seeing, for instance, I think it's really key that the Treasury 10-year yield very much backing away from that 2% pain threshold that a lot of investors were kind of seeing as a potential warning sign for risk assets in the earlier part of the year. We're very much away from that now. I think we're below 1.9% at the moment on the 10-year, and just really speaks to how much risk aversion these tensions are introducing to markets at the moment, and potentially derailing or at least delaying some of those more hawkish expectations for policy for the rest of the year. And
I want to get onto the policy response, the ECB and the Fed, of course, and how it flows over to that reaction from central bankers. But when it comes to the energy complex and oil now making this fairly dramatic move that we've seen in the last 24 hours, we could be hitting $100 a barrel, watching that very closely. The implications for that and where we are in terms of pricing the energy shock and the inflation shock across Europe.
Absolutely, Tom. I think that is definitely very much part of the conversation, this idea of $100 price for oil. And of course, the energy shock, it's not getting any better. And so something like this that kind of just further aggravates it would probably just make it even worse, right? And so the reverberations of that and the implications are potentially huge, especially as policymakers are still trying to grapple with how to rein in these surging inflationary pressures across the board. And something like this, another kind of leveling up of the energy shock, really just adds to the complications for policy moving forward.
How does gold factor into this? Is it breaking high? It's above $1,900 a barrel. Can it go further? There's the tug and the pull and tug between the geopolitics and the haven status that it has, but the erosion of the inflationary data.
Absolutely, Tom. And, you know, gold, I think a lot of proponents of gold would argue is a great inflation hedge. And so you would think that that also adds to that sort of demand. But then, of course, the geopolitics also kind of boosting it. But then there's also the dollar, right, which is part of the equation and something to keep in mind. And the dollar is really direction-wise quite murky in terms of where it's going to go next. Because again, I think there is some expectation that perhaps the Fed expectations are quite baked in, and perhaps the dollar is starting to top out. But then, you know, when you face a day like today, havens are all in demand, and the dollar is definitely at the top of that list. Great implications for gold.
And if you get fewer rate hikes, and of course that could be positive for gold as well. When it comes then to the reaction from the central banks, just briefly, does it change the calculus for the Fed at this point?
Well, it certainly potentially slows down that process of rate hikes. We're already seeing markets pairing some of those expectations. We'll be hearing from a few officials from the Fed, the ECB, and the BOE over the next coming weeks in the run-up to the crucial March meetings. So we'll see if they validate that pullback or if they're indicating that they're going to be pushing through with these rate hikes, regardless of what we're seeing today.
Such an important day for the markets and geopolitics. Christina Aquino, thank you for walking us through some of the key themes. OK, coming up, German's IFO business survey for February. It beats estimates. We'll get an implication. We'll discuss what the impact could be on the German economy of potential additional sanctions on Russia, as well as gauging the business sentiment. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, the latest German IFO business survey suggests leaders are still expecting robust growth. Business leaders, that is. The survey for February has come in at 99.2. The Bloomberg estimate was 96.2, so well above the Bloomberg estimate. Joining us now is Clemens Fuß, president of the IFO Institute. Businesses then, Mr. Fuß, in Germany, the most optimistic since they've been since July. Help us square that then with the commentary that we got from the Bundesbank yesterday, warning that maybe Germany dipped into a recession in the first quarter, is headed to a recession in the first quarter as a result of Omicron.
Yes, one factor is certainly that what we see in our survey is that expectations have become much more optimistic. So companies are expecting an end to the coronavirus crisis. And what we also see is that companies in the service sector and in retail seem to cope better with the current wave of infections than expected. So a lot of companies are telling us, yes, our sales are up better than we expected. So I think it's these two factors that may explain the difference. The Bundesbank focuses more on current indicators. Still, there is it's not quite clear yet how these two surveys can be made compatible.
Yes, still not clear on how they are aligned. When it comes to the question of supply chains and how German businesses are working through those and resolving some of those issues, where are we in that process?
I think here as well, companies are betting on improvements, but we don't see these improvements in the data. So in manufacturing, for instance, still more than 2/3 of all companies are telling us they do suffer from supply chain problems. At the same time, it seems that production is nevertheless growing. So it seems companies seem to learn increasingly to work around those supply bottlenecks. The only area where we see a relaxation is construction, but in manufacturing, we don't see that yet.
OK, so adjusting to some of those supply chain constraints. When it comes to the big geopolitical story of the moment, what is the vulnerability of the German economy at this point to additional tensions and to potential sanctions on Russia?
Well, first of all, in terms of export trade with Russia, this trade, yes, does play a role, but it's not so significant. Russian GDP is approximately the same as Spain's GDP, so it's a significant country, but maybe smaller than many people think. And German trade has been subdued for some time due to sanctions after the Crimean crisis. The vulnerability of the German economy is clearly energy supply, but even there, the winter is almost over, and other supply routes, other sources of supply have been discussed at least, and have been prepared. So overall, yes, we do. The German economy will be affected by rising energy prices, but probably not much more than everyone else.
Have you seen any evidence of businesses there in Germany hedging their energy costs or putting in place measures to mitigate severe jump up in prices? We're already seeing European gas up, more than 10% today, and Brent closing in on $100 a barrel.
We don't ask companies specifically that question. We may do so in the future, but it seems clear that companies are preparing, have stocked up on energy reserves, no doubt, because this crisis has been going on for some time.
Where would the pain point be if Nord Stream 2 is finally cancelled?
Well, I think Nord Stream 2 is more a medium-term issue. So the question is, how will gas supply be organized in the future? It's not so much a short-term issue. So what we will probably get now is a more diversified gas supply to Europe as a whole, not just to Germany, more liquid gas, and this will be slightly more costly. At the same time, probably demand for gas will be declining over the years due to the transition to green energies. So I don't think it's so much of an issue. It's clearly a loss not using Nord Stream 2, but it's a sunk investment in a way.
OK, Clemens Fuest on the implications for the German economy of any additional tensions between the West and Russia. President of the IFO Institute, and the IFO Institute survey coming out showing that businesses in Germany are more optimistic, the most optimistic they've been since July. Whether the geopolitics clouds that going forward, of course, a question. Let's check in then on the markets and Russian, of course, assets firmly in focus. This is the Russian internet company slumping, I should say, pre-market. Yandex down almost 20%. And of course, you've seen across the equity space in Russia losses of more than 15% just over the last 2 days. The ruble remains under pressure above 80 per US dollar. And we know that yields have jumped as well in terms of Russian sovereigns 10-year. Here in Europe, you're seeing losses of 0.5%, pairing some of the heavier losses. Future stateside pointing to losses of more than 1% on the S&P E-mini futures. OK, coming up, energy markets are volatile as investors try to assess the risks from the Ukraine crisis. We'll have the latest next. This is Bloomberg. Welcome back. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Brent touched $99 a barrel this morning for the first time since 2014 as Ukraine tensions whipsaw through the markets. Currently, just checking in on the live price, $99.25, so up 4% in the session. Joining me now is Bloomberg's executive editor for energy and commodities, Will Kennedy. Will, what do you make of the moves that we've seen in Brent and WTI?
I mean, it clearly indicates that markets are nervous about the escalation we've seen in the Ukraine crisis overnight. Russia, of course, is the world's second largest exporter after Saudi Arabia. There's no suggestion that those flows will stop anytime soon. But of course, a conflict would pose big risks for the oil market, and I think traders are trying to get ahead of that this morning.
We saw a big pop in natural gas prices earlier on in the session. They've come off a little bit, but Brent is still elevated. What is the overlay between gas and oil?
I mean, again, Russia is one of the world's biggest gas exporters, and it provides about a third of the European Union's gas. Traders are very nervous that in the short term any conflict might hit gas supply, although it's notable that the energy minister of Russia today has come out and said, you know, we plan to be a consistent supplier. And then, of course, looking further out into the future, there's the question about whether these tensions will stymie the Nord Stream 2 project, which you were talking about just a moment ago.
And briefly, just OPEC Plus next week. Can they come to the rescue?
Well, it's coming into focus. They meet on the 2nd. As we understand it, their current plan is to proceed with their very incremental 400,000 barrel a day cut. What we're hearing is there's no idea of diverting from that. But of course, as oil prices rise, political pressure will come from the US, from India, China, to do something about it. So it's going to be an interesting discussion going into next week.
Will Kennedy with a preview of OPEC Plus there, and of course the implications for what is happening on the Ukraine border. Thank you, Bloomberg's executive editor for energy and commodities. Now coming up, we're going to stick with the commodities story. There's a lot to unpack. We're going to speak to the CFO of Norsk Hydro, joining us to discuss earnings at the Oslo-based aluminium producer. Don't miss that conversation. We'll get some forecasts on price, demand, and of course the impact of any potential sanctions on Russia. This is Bloomberg. President Putin recognizes 2 breakaway republics in eastern Ukraine. US and European leaders condemn the move, and talk turns to sanctions. European stocks claw back earlier losses, but investors still seek the safety of sovereign bonds and gold. Energy prices surge on Ukraine. European natural gas leads gains in commodities. Brent crude tests $99 a barrel. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Let's check in on your markets then, an hour and a half into the European trading day. And we are pairing some of the heavier losses, and some of those safe haven moves are becoming more muted. You're seeing that reflected in gold. It remains around $1,900 an ounce, but it's currently off by about 0.3%. Brent remains elevated, up more than 3.5% at $98, close to $99 per barrel. Will we get to $100 the next hour or so? That will depend on the headlines likely out of Moscow. In terms of the benchmark European stock 600 is seeing losses of 0.6%. The future stateside pointing to losses of more than 1%. The asset moves in Russia then remain pronounced. You're seeing a loss of about 16% across Moscow's and Russian equities just in the last 2 days. We're looking at Sberbank just as an indicator of the risk that is being felt within the financial sector as we expect, and as the Russians gird themselves for additional sanctions from the European Union potentially later today. That stock down more than 25% over the last 2 days. Yields remain elevated on the Russian 10-year, and the ruble remains just a little bit below now 80 on the ruble, but the pressure there continues on the Russian currency. That is the state of play across Russian assets. Again, as the future stateside point to losses of more than 1%. Let's dig into the major geopolitical story then, in this huge and significant move by President Vladimir Putin, announcing that he's recognizing 2 self-proclaimed separatist republics in eastern Ukraine in what is seen as an escalation in Russia's standoff with the West.
I consider it necessary to take a long overdue decision to immediately recognize the independence and sovereignty of Donetsk's People's Republic and Luhansk's People's Republic. I'm asking the Federal Assembly of the Russian Federation to support this decision and then rectify treaties of friendship and mutual assistance with both republics. We demand for those who took over and retained the power in Kyiv to immediately stop combat activity. Otherwise, the responsibility for continuing the bloodshed will lay on the shoulders of the Ukrainian regime.
Meanwhile, Volodymyr Zelensky says Russia's decree undermines peace. In a late-night address to the nation, the Ukrainian president says the country will continue seeking peaceful and diplomatic solutions.
There are now absolutely no reasons for chaotic actions. We'll do everything to keep it this way in the future. We'll stick with the peaceful and diplomatic way. We'll only walk this way. We are on our land, and we are not afraid of anything and anyone. We don't owe anything to anyone. We won't give away anything to anyone. We are confident in this.
OK, the presidents of Ukraine and Russia speaking there. Joining me now to talk Russia-Ukraine tensions and more is William Alberque, Director of Strategy, Technology and Arms Control at IISS. IISS and someone who has deep experience at NATO, formerly focused on arms control at that organisation. William, thank you for joining us this morning. How pivotal is this moment in your view?
I think it's a pivotal moment in European history. It's a pivotal moment in world history. I haven't seen anything like this since, I guess, the Balkans crisis was the last time we had a crisis of this scale in terms of threatening the underlying rules-based order.
And what would you assess as the risk now of further escalation from Russia? Does Putin stop here, or does he go further?
I don't think he can stop here. If his intention all along was to recognize the two breakaway republics, then you wouldn't need 150,000, 160,000 troops. You wouldn't need amphibious assault vehicles, missiles in Belarus, troops in Belarus. I think he's going to go further. What I'm afraid of is that he's now going to go out to the area that the LDR and the DPR claim for themselves. So he's going to push further west into Ukraine and possibly even towards Kiev if the front line opens up that much.
So that's how it could unfold. The Baltic states have long warned about Russia as an aggressor. And we should point out that the Russians continue to say that they have no plans to invade Ukraine. But what is the risk to the Baltic states at this point?
I think the risk of kinetic attack on the Baltics is very low. I think the risk of continued hybrid pressure is very high. And if the West does not remain resolute, then, of course, all kinds of opportunities will open up to put further pressure on them. But for right now, membership protects them. The Article 5 promise is strong. And quite frankly, I think the NATO alliance comes out of this crisis much, much stronger in terms of the need recognized by all allies to deploy even further troops forward to defend the Baltics, to defend our allies in Southeast Europe, to defend allies across the alliance.
Is there a risk? I mean, the US and President Biden has made it very clear he doesn't want to see US troops on the ground in Ukraine. But is there a risk that the West, that NATO gets sucked into this conflict more directly?
I don't think there's a risk of direct combat. I think the big risk that you see in any warfare is that the borders of Ukraine may now become chaotic if larger offensive maneuvers by the Russians occur. If Russia really starts causing casualties and you start seeing refugees pour across NATO borders to the west, then NATO troops are going to have to move forward to control the refugee flows, to help them, to aid them. Does conflict spill over? Does that have a chance to trip into a broader NATO on Russia conflict? It does, but then you're talking about the NATO response to a massive humanitarian crisis caused by Russia. The blame will be clear on Russia, as we heard from the UN Security Council dialogue last night. Countries around the world condemning Russia. It's a very interesting situation. And very tense.
Okay, let's draw on your experience. Let's draw on your experience at NATO then, and particularly around arms control, as the two sides square off against each other, the separatists and potentially Russian military, if they do indeed go to those territories, versus the Ukrainian army. What is the military capability of the Ukrainians? The consensus seems to be that they are no match for Russia, and that Russia will be easily able to overcome those forces. Is that your assessment? Is that the correct way to look at it?
Russia has amassed such immense capability, especially in terms of precision-guided missiles, cruise missiles launched from the air, from ground, from sea. They have very advanced amphibious attack aircraft in the amphibious attack ships in the Black Sea, ready to attack there as well. They have very advanced electronic warfare and special operations. But if we're talking about force-on-force grinding conflict, Ukraine can inflict a lot of damage on the Russian military. Russia has tremendous advantage if they do standoff warfare, but if it's in terms of taking and holding territory, I think the Ukrainian army can elicit tremendous costs from Russian forces if they move west.
OK, let me fold two questions into one. Do you expect the Germans to play more of a role in supporting Ukraine, potentially with military technology that they've been reluctant to do so far? And what do you think the shape and flavour of sanctions could be from the EU?
Yeah, I saw a funny and sad tweet last night. They asked if those 5,000 German helmets had arrived yet. I think, yes, a lot of the opposition to supporting Ukraine from Germany with solid military capabilities is going to fall away. I think it has to at this point. They've been exposed. Those who have opposed support for Ukraine in the past have sort of been exposed now. Yeah, I think there's been a big change there. And I'm sorry, what was the other question? I lost you there.
Well, no, it's on sanctions, actually, and what you might expect
sanctions.
from
I think there's going to be
the
very
EU
strong
response on
sanctions.
sanctions.
Yeah, I think the EU has to come in now with sanctions. As Russian peacekeepers, quote unquote, move into Ukraine, this has to trip the strongest of sanctions. And I think Germany now has to look at Nord Stream 2 as a lost cause. I don't think they can wait for further Russian maneuvers. I don't think they should be waiting for massive Ukrainian loss of life to enact all these sanctions that they've been talking about. There will be some EU member states who will still be reluctant, who will still want to hold on to the strongest of sanctions. But I think the debate gets on right now about the strongest sanctions possible. I think Nord Stream 2 is in real trouble, and we'll see where they come out with the dialogue that's happening in Brussels right now.
Okay, really solid insights. We appreciate it. William Alberque, Director of Strategy, Technology and Arms Control at IISS and formerly of NATO on arms control. Okay, coming up, more on commodities. Norsk Hydro's CFO joins us to discuss earnings at the Oslo-based aluminium producer and, of course, also the geopolitical implications on that sector. Don't miss that conversation. This is Bloomberg.
Our exposure to China real estate is just over 20 billion. About half of that sits in the offshore book. We have taken some incremental provisions today. I think this follows sort of policy tightening that happened at the back end of last year, which has caused some liquidity issues for the sector. But I would keep it in perspective. You know, the $10 billion is about 1% of our overall property exposure. So we're sort of managing through and do expect recent policy measures to ease some of the liquidity pressures we've been seeing in that sector.
When we caught up at the end of Q3, it was $2 billion. You talked about a progressive dividend. Today, it's $1 billion. I know it's a tailwind to the $2 billion we've just had. The estimates that I had from a number of people were for a lot more than $1 billion. Why $1 billion? Why much less than the end of Q3?
So we're still in the middle of our $2 billion buyback program. We think the dividend per share is up 2/3 on what it was last year. So we are trying to do a mix of both dividends and buybacks. I think overall, we think we are in line with consensus expectations on the buyback.
What do you think we'll get from the Fed, Ewan?
Look, we certainly agree with the consensus view that we're going to see a considerable number of rate rises happening over 2022 and into 23, both in the US and also in the UK here.
What can we get in the UK? 4 people voted for 50 basis points at the last meeting. Do you think we'll get 50 basis points in March? And where do you see rates by the end of the year in the UK?
Yeah, I mean, I think we see rates going up materially from where they are today, whether we see 25 or 50 basis points at the next meeting. I think we're on a progressive set of rate rises.
That was Hsbc CFO Ewan Stevenson speaking to Bloomberg anchor Manus Cranny earlier today. Staying with the earnings picture, Oslo-based Norsk Hydro's earnings, well, they more than doubled in 2021, bolstered by booming demand for aluminium and a sharp rally in prices. It did report, though, the company adjusted EBITDA for the fourth quarter that missed the average analyst estimate. Pal Kidemo, Executive Vice President CFO of Norsk Hydro, joins me now. Pal, thank you for joining us on a busy day, no doubt, for you and the team. What is the outlook for you now in terms of demand, and do you see prices remaining at elevated levels?
Thank you for having us today. We see prices remaining at elevated levels well into the first quarter now, and it's driven by the strong demand. But I think what is having the biggest impact on our industry at current is the supply side. The soaring energy prices that we have experienced through Europe has really impacted smelters which are exposed to gas or electricity, which means that around 700,000 tons have had to curtail. And that has tightened an already tight market, which was going up on the back of the strong demand that you referred to.
Do you see that capacity and that production coming back online, or do you see more of it being taken off, given what we're seeing on the geopolitical front and the expectation from many that energy prices just go higher from here?
If you look at the balance in the world outside China, it's around 1.5 million tons under supply. And that includes the 700,000 tons curtailment that I just mentioned. But if you look at smelters which are deemed at high risk, which already have costs eating well into their earnings, that's another 700,000 tons. And if you look at medium to high risk smelters, that's another 400,000 to 500,000 tons. So at the moment, given the current escalation that we're seeing and the potential risk to energy markets, there's probably a larger downside in the way of more smelters being curtailed than smelters coming back, because energy prices are not falling these days.
We heard from the trading giant Trafigura, and they suggest that stockpiles could essentially be down to zero by 2024. They could disappear by 2024. Does that align with what you're seeing?
We still have quite high inventories, and it always depends on how large the undersupply is. But if it continues to remain at the current levels, then you'll eaten up quite a large part of inventories at the back of 2024.
OK, how are you thinking about Russian supply in light of what we're seeing? We're waiting those sanctions potentially from the EU later today. If Russia gets hit, what is the broader impact on the aluminium market?
Firstly, I would just like to say that we follow this situation in the same way that everyone else, and we hope that it's resolved in a peaceful manner. If it were to escalate, then there's three areas that I believe the aluminium industry can be exposed in majority, depending a bit on what sanctions are put in place. The first is aluminium. With these really tight markets, you remember the last sanctions towards Russia, we saw a huge increase in prices, and that was on the back of balanced markets. And it's not that easy to mitigate in the short term either. The second area that can be impacted is alumina markets. We have Russian producers of alumina and bauxite outside Russia. Those we think could be able to balance in the short to medium term as global flows shift. And the last one is, of course, the energy prices. If these increase, it will be more challenges for already squeezed European aluminium producers on the cost side. So all else equal, there is quite a large upside price-wise if this escalates and sanctions triggers the aluminium industry.
Does it get us to 4,000 a ton by the end of the year?
Well, I tend to not speculate on prices in the public sphere, but if you look at some of the third-party analysts, you see $4,000 and $5,000 being mentioned.
What are the biggest cost implications for you at this point, for Norsk Hydro at this point? You talked about a lack of supply around things like silicon and magnesium last year. Does that continue?
Silicon and magnesium has moved into a better position. Prices are still high, but the supply demand is a bit better, also supported by some of the curtailments that we referred to earlier. And our situation is good, at least for the next 6 months, if things don't escalate. We are also in the favorable position that we have a renewable energy backbone, which means that we're covered primarily on the energy side. So where we are seeing the biggest push on the cost side now is probably on carbon in coke and pitch that you use for the production of aluminium. But we're in a much better position than the industry as a whole, and they're also in a position to benefit now as the demand for greener products becomes stronger and stronger.
OK, and just finally, what is the demand looking like from China post-Lunar New Year and also the auto sector?
China is a bit weaker on the demand side compared to what we're seeing in Europe and North America. It's impacted by Omicron to some extent, uncertainty in the market, and also the auto industry. The auto industry as a whole, we're seeing the outlook in Q1 for Europe being quite weak compared to previous quarter, as the chip shortages continues to impact us. Whereas in North America, we see it as much stronger. But the sentiment now is becoming more towards resolving of the chip situation during the year. So hopefully we move back into a more balanced situation towards the back end of 2022.
Okay, Pal Kadermo, Executive Vice President and CFO of Norsk Hydro. Thank you for joining us and giving us your views on all things geopolitics and the price and demand outlook for aluminium. Let's check in on the markets then, and you're still seeing losses of around 0.8% across the European benchmark. US futures, after the markets closed yesterday for President's Day, looking to losses between 1 and 2%. 2% on the Nasdaq futures, 1% on the S&P E-minis. There's still a bit of a muted demand for Treasuries. 190 now on your US 10-year. So that demand coming off a little bit, yields up just 2 basis points. Gold is at $1,900 an ounce, and Brent remains elevated, $98 an ounce. S&P E-mini futures, as you see, down more than 1%. That is the shape of play across these markets, almost 2 hours into the trading session here in Europe. Coming up, is life back to normal? England scraps remaining COVID restrictions. We discuss in more detail. This is Bloomberg.
Until the 1st of April, we will still advise people who test positive to stay at home. But after that, we will encourage people with COVID-19 symptoms to exercise personal responsibility. Just as we encourage people who may have flu to be considerate to others.
UK Prime Minister Boris Johnson speaking in the Houses of Parliament on ending COVID restrictions in England. Let's bring in Bloomberg's Leanne Gerrans then for the details on this. Thursday being flagged as Freedom Day again. There's a flashback to that. Reminds me of the previous 3. What is different then? What are they announcing? How material is this?
I just want to say how great it is to be on set with you, Tom Mackenzie.
It's a historical moment.
Yes, it is. We're normally in radio together, so nice to join you. What feels different this time? Do you remember the first time? Well, I think a lot of people were out partying in the parks, but what feels really different now is a lot of us have been vaccinated, and Boris Johnson did end all those COVID curbs yesterday, saying that now is the time really for us to take personal responsibility and use common sense. And what's happening is on Thursday, if we test positive for COVID, we no longer have to self-isolate. And also another important thing is happening in April. Free tests will be going, which is raising some concern. And there has been warnings from Boris Johnson's own chief medical advisors who are saying that this is a little bit premature and we could see new variants. They are inevitable really in the country, Tom.
So there has been some pressure on the Prime Minister over this, some reaction, some pushback from some.
Yeah, there has been reaction, and I think a good place to start is with the Labour leader, Keir Starmer. He sees us as leaving England in a really vulnerable position. And of course, as I also said, his chief advisors are saying that we could see new variants which could evade the vaccines. And also charities are warning that people, Tom, who are left vulnerable and who are disabled are now in a more difficult position.
Okay, Leanne Gerrans on the latest in terms of the removal of those restrictions by Boris Johnson come Thursday. Your market's lower by 0.8% in Europe. Futures pointing lower by more than 1% stateside. This is Bloomberg.
Doesn't like to be surprised.
Markets don't like uncertainty. The tensions with Russia and the Ukraine create uncertainty.
You have the markets that are volatile right now.
This is a market where you do have a really diverse, I think, vulnerabilities.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Tuesday, February 22nd. Our top stories today. A dramatic escalation in Russia's standoff with the West. Vladimir Putin recognizes 2 self-proclaimed republics in eastern Ukraine, and he orders what he calls peacekeeping troops to the region. The US and Europe respond. They denounce Moscow and threaten to impose more economic sanctions. More sanction detail is due today. And as tensions mount, stocks slide, energy prices soar, and investors seek security in some government bonds. Welcome to Bloomberg Surveillance. This is the early edition. I'm Anna Edwards, live in London with Matt Miller and Kailey Leinz in New York. And Kailey, European equity markets, another day, day two, spending their time very much focused on the geopolitics.
Yeah, I think markets across the world are focused on the geopolitics and the potential implications of Vladimir Putin's recognition of those separatist regions in eastern Ukraine. As the market grapples with what exactly that means in terms of sanction, economic repercussions, it really is leading to a broad risk-off day. That was evident in Asia overnight. Stocks really down across the board. The MSCI Asia Pacific Index as a whole was off by about 1.5%. The big laggard within that was Hong Kong, and that was a move led by technology. The Hang Seng Tech Index down for a third day, lower by about 2 percentage points, right around the lowest levels since its inception in 2020. Now, part of that has to do with the selling in tech shares we've seen globally, but part of it also is the rearing of regulatory risk from Beijing. Once again, Alibaba and Ant Group are the latest targets. I would also point out that Rusal, of course, the Russian aluminum maker, which is listed in Hong Kong, fell the most since 2018, 19% down overnight. And of course, that move in 2018 was after the U.S. sanctioned it 3 or 4 years ago. So there's a bit of a fear returning that sanctions could be coming for that company once again. And then I would just point out the Japanese yen is a relative outperformer in Asian FX today, thanks to a bit of a safe haven bid, but the dollar is still just stronger against the yen. 114.80 is where we trade, Matt. It is broadly a stronger dollar story today.
Yeah, absolutely. Although that has changed in the past 30 minutes or so. We saw a little bit of weakness in the U.S. dollar. We saw investors willing to let go of some of their treasuries. We saw some gains and still see some gains in Bitcoin. So although we do see European stocks down and we see S&P futures down as well, there doesn't seem to be, there's no surprise to this, right? We knew that this was going to happen. At least the Biden administration had been telling us for weeks that it was a near certainty. And there doesn't seem to be a lot of uncertainty here. In fact, maybe this is a sly way for the West to allow Russia to take some parts of Ukraine, because we're hearing from Western officials that there aren't going to be the steep sanctions there would have been had there been a full-scale invasion, and a lot of European officials are telling us the same thing. Nonetheless, we do see S&P futures off 1%. The dollar index really unchanged right now, and you're not seeing a flight to the yen or the Swissy, so you don't see those safe haven flights. The U.S. 10-year yield right now at 1.9009, so little change there, maybe a little bit of buying in bonds, but not too much. And you see Bitcoin right now, little changed, but with a green arrow there. So you don't see, if this was a total surprise, Anna, and if we were freaked out about massive sanctions, I think you would see much bigger red arrows in terms of futures and stocks. Yeah. Goldman Sachs, remember, saying they thought there would be a 6% correction if there were Ukrainian invasion.
Right. Well, a lot of diplomatic voices saying to us that this does break the Minsk agreement and therefore is really significant. But to your point about the lack of reaction we're seeing in FX, some of that perhaps happened yesterday. We didn't see all that much flight into the dollar yesterday either, but we did see the yen gaining. We saw the Swiss franc gaining. So we saw a little bit of that yesterday. And today we're left with this on European equity markets in what is day two, I suppose, of the European and to some extent global reaction to this narrative. So this is European equity markets moving to the downside, down by 0.4%, one of the better performances in London. Elsewhere, we see bigger moves and down by more than 2% on some of these European equity markets in yesterday's session. Certainly true of the CAC and of the DAX. In terms of the Russian assets themselves, though, we see selling of Russian stocks. We'd seen the ruble under pressure, the ruble a little more stable today, but we'd seen the ruble under pressure, weakening to 80 to the dollar. We've seen yields on Russian debt go higher, CDS go higher, so the cost of insuring against the default on that debt going higher. So there is some reflection of this more recent nervousness and these latest developments in Russian assets. Brent crude is certainly a place we're seeing market reaction, up by 3.7% there, 98.95. We've been above $99 earlier on this morning. We pulled back from that level. How quickly do we get to 100 is a question we could be asking. HSBC numbers out. We continue to track the earnings story, of course. The big bank giving us numbers and also a return of cash to shareholders, a buyback, and that cushioning the downside, some impairments, some charges they needed to take in relation to Chinese property weighing on the stock. And Volkswagen, this one, Matt, is obviously for you. Volkswagen Volkswagen shares up by 8.9% today. Confirmation from the company, perhaps a little earlier than expected, that they are in talks about a listing of Porsche, an IPO of Porsche. Remember, the Porsche listing we see right now is not connected to the Porsche sports cars. And so that is something the market is focusing on. Perhaps that kind of move, Kailey, could unlock some value, seems to be the thinking over at Bloomberg Intelligence.
Well, and we know Matt Miller will be paying attention to that story throughout the day today, as we all will. But there's a lot more we will be paying attention to as well, including a flurry of Western leaders and Eastern European leaders that will be meeting and speaking later on today. So we'll look for any reaction we are getting to the situation unfolding in Ukraine. But on the data front, we will also get U.S. retail earnings from Home Depot and Macy's later on today. Bank of England member Dave Ramsden will be speaking at the National Farmers Union Conference at Birmingham at 5:45 a.m. New York time. We'll also be hearing from Atlanta Fed President Raphael Bostic, who will be taking part in a moderated virtual discussion hosted by Duke University at 3:30 p.m. New York time. And in terms of economic data here in the U.S., consumer confidence and PMI will be among the numbers that we are getting, Matt.
All right, let's turn back to our top story now. Western condemnation is growing after Russia's President Vladimir Putin officially recognized two self-proclaimed republics in eastern Ukraine, though the condemnation isn't as bad as it would have been, we're hearing, had there been a full-scale invasion. Putin ordered his forces as peacekeepers into the region, and everyone seems to put the quotes around it, which is why I do the air quotes. For those of you listening in radio, I'm doing the bunny ears here. In a late-night address to the nation, Ukraine's president said that Ukraine will continue to seek peaceful and diplomatic solutions.
There are now absolutely no reasons for chaotic actions. We'll do everything to keep it this way in the future. We'll stick with the peaceful and diplomatic way. We'll only walk this way. We are on our land, and we are not afraid of anything and anyone. We don't owe anything to anyone. We won't give away anything to anyone. We are confident in this.
Let's get more with reports from around the world. In Moscow, we've got our Russian government editor, Tony Halpin. In Brussels, we've got our European correspondent, Maria Tadeo. And in Washington, we've got our correspondent, Joe Matthew. Let's start out in Moscow with Tony. How does Russia see the reaction that they're getting in terms of this move, essentially to, annex two more territories from Ukraine?
Well, Putin was quite careful yesterday to say that Russia wasn't annexing these territories and that, in fact, he was recognizing them. And I think they've already calculated that there would be a sanctions reaction at the Security Council meeting that Putin held yesterday. Officials basically told him that Russia had been preparing for sanctions for years. So they're waiting to see what the West's response will be. But they feel, I think, fairly confident that they've already covered possible bases here.
Well, and then on the Ukraine side of things, we're hearing from President Vladimir Zelensky, who is speaking right now in Kyiv. He is urging an international response to Russia's separatist recognition. Also says that Russia has, quote, set legal ground for further aggression. What do you make of the messaging we are getting out of Ukraine, who has consistently tried to play down the threat of a large-scale crisis?
Yes, President Zelensky is in a difficult position because at the end of the day, it will be his forces that have to defend against any Russian invasion. So it's in his interest to say that they'll pursue a diplomatic path and appeal to Western partners to take strong action to deter Russia. But when push comes to shove, it doesn't look like there'll be a lot Ukraine could do if Russia invades further. Clearly they'll resist, but no one's in any doubt what the outcome would be. So Zelensky needs to rely on diplomacy. He needs to rely on Western allies to apply pressure to Moscow.
Tony, thank you very much. Let's get to our colleague, that's our Tony Halpin, Russian government editor. Thank you for your thoughts. Let's get to Maria Tadeo in Brussels for the European reaction. And Maria, we've heard from some European leaders on this. We've heard from the foreign policy spokesperson for Europe. Meetings will take place later today. But do we moderate our expectations on sanctions? Because Bruno Le Maire, for example, the finance minister in France, talking about gradual and targeted sanctions here.
Well, Anna, a couple things here. When you look at the speech that Vladimir Putin gave yesterday, European officials were horrified by the language that he used. Of course, we know that he said Ukraine as a nation state is falsehood. It's a fake country. He said it was created by Russia and, in fact, by Russian Bolsheviks. And this point and at this stage is controlled by the West to hurt Russia. So clearly, this is not the language that you want to see from a leader if you're looking to de-escalate. Now, that takes us to sanctions. We know there is a meeting that is happening in Paris. The top diplomat for the European Union says this package is ready to go, but there's still a big question mark as to how big is the European Union going to go. And I would point to one thing. Officials here say that when you look at the details and the technicalities of what Vladimir Putin did yesterday, he did not annex the two republics. This is not Crimea 2014. What he's saying is that the Russian Federation recognizes two independent states. They also say that sending troops, well, that is recognition of the situation in reality. We've seen this fighting going on for 8 years. So a lot of officials pointed that the situation is much more complex than it would seem on the surface of it. Having said that, of course, when you look at the Eastern European countries, and in particular the Baltics, they say this is really the time to go big on sanctions. If we don't do it now, we're going to see an escalation. And what more will it take to have a response that is united for Vladimir Putin?
Right, although it's unlikely that the West is going to now. Bloomberg News is reporting that a senior administrative official told reporters the sanctions currently planned are separate from the more severe measures that had been planned were there an attack. And we heard from Lithuanian Foreign Minister Gabrielius Landsbergis that it's not yet the invasion that the partners have been talking about. Even Volodymyr Zelensky, speaking right now, said that Kiev is weighing cutting diplomatic ties with Russia. So they haven't even gone that far. Is this maybe a smooth way in for Russia?
Look, I think there's one thing, and of course you have to be very careful here, but this fighting has been going on for 8 years. But the Ukrainian government said, and they said it very clearly, is that this is our nation and we will fight for it, and everything here, every little piece of it is our nation. Having said that, there is a reality to recognize, Matt, here. The fighting there has been going on for 8 years. There's been this confrontation between the two sides for a long time. The question, and this will be the focus, is whether Russia stops at these two republics or whether they want to go beyond. And an official told me if they go into the Donbass, and that is the bigger eastern Ukraine area, then that could be very problematic, and that means potentially an escalation in the conflict. But for the time being, of course, it's the diplomatic channels. Again, the criticism, as you pointed out, is that, of course, it's diplomacy, but the Russians at this point, they're not attending to diplomacy. They're using force on the ground.
All right, Bloomberg's Mireille Tadeo in Brussels, thank you so much. And of course, something the European Union is also considering is the fate of Nord Stream 2. And Vladimir Zelensky just urging Nord Stream 2 project to be stopped. And of course, the U.S. has a certain stance on that as well. So let's get to the U.S. response. The country really led the condemnation of Russia's decision at the United Nations. And Secretary of State Antony Blinken spoke on CNN this weekend.
We believe President Putin has made the decision. But until the tanks are actually rolling and the planes are flying, we will use every opportunity and every minute we have to see if diplomacy can still dissuade President Putin from carrying this forward. President Biden is prepared to engage President Putin at any time in any format if that can help prevent a war.
So let's get to Joe Matthew, Bloomberg Washington correspondent, who joins us from D.C. Joe, obviously the U.S. has announced specific sanctions in the breakaway regions. Is what we just heard from Antony Blinken about the still potential path forward for a diplomatic resolution here mean no broader sanctions for now?
Well, that appears to be the case for now, but that can change within hours. A senior administration official briefed reporters in a call last evening saying that Vladimir Putin's address was a speech to the Russian people to justify a war, reiterated sanctions on the two separatist regions, to your point, stopped short of calling this an invasion. The official said Russian troops moving into the Donbass would not itself be a new step, pointing out that Russia, as Maria was just saying, has had forces in that region for the better part of 8 years. Now, to be clear, the White House is promising further sanctions today. They just didn't qualify or specify what those would be on the call. It's unclear what that exactly will be, who or what they will target following continued talks with our European allies overnight. But I will say that we're hearing from a lot of members of Congress, many of whom are running out of patience. The Democratic and Republican leaders of the Senate Foreign Relations Committee both issued statements last night. Chair Robert Menendez, Democrat, says crushing sanctions should be imposed if any additional Russian troops cross into Donbass. Specific, and something that we should keep an eye on here. Ranking member, the Republican James Risch, says recognizing the republics, the move that Vladimir Putin made yesterday, is, quote, tantamount to invasion, and says sanctions should be imposed immediately. This is where the debate, Kailey, is going to begin this morning in Washington.
Joe, the question is, do we have crushing sanctions? Is there such a thing? You know, Putin will tell you that he has prepared for any sanctions from the West, and certainly the U.S. is even less capable of crushing Russia, as we don't buy as much gas as Europe does.
That's true, and I wonder if a conversation about sanctions right now is going to dovetail with the administration's efforts to find alternative sources of energy for our European allies. They're clearly buying a little bit of time here and trying to be specific, Matt, about what actually is an invasion. Just because Russia says it's putting peacekeeping troops in, for instance, they want to see the tanks rolling. And if, to Maria's point, this goes beyond these two separatist regions, if it goes further into Donbass, I think it's a completely different conversation. That's when we hear more specifics about sanctions. But let's also recall that an attempt in the U.S. Senate to craft a sanctions bill fell through. We talked about this a week ago, leaving us with nothing but a non-binding resolution. This is something that could have been much more specific if lawmakers had been on the same page here, Matt.
All right, Bloomberg's Joe Matthew in Washington for us. Thank you so much. And of course, you can listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now, let's take a look at how some individual stocks are moving in pre-market trading here in the U.S. off the back of all of these geopolitical developments, because, of course, it is moving oil and gas prices higher, and that is translating into related equities, one of them being Cheniere, which is a big LNG player here in the U.S. Its ticker is literally LNG. It is getting a big boost with those higher gas prices, up more than 7% in early hours. And the same is true for a lot of oil and energy-related equities, especially those E&P companies, the likes of Occidental Petroleum, which is higher by the better part of 5%. One big mover to the downside, though, is Yandex. This is a Russian internet company, operates a search engine. Also, there's a taxi component to this as well, but it, of course, is listed here in the U.S. And with these tensions, once again, first and foremost on the agenda, Yandex is plunging in early hours, down almost 16%, Anna.
Yeah, Kailey, you were talking about Asia-listed companies with exposure to Russia. We see here a Vienna-listed bank with exposure to Russia being sold off as well. So the impact goes far and wide. Coming up on the markets, Koku Agbublua, Societe Generale head of UK research. We'll speak to him about how you stay clear of geopolitical risk at this stage. And on the tensions with Ukraine, between Russia and Ukraine, Orysia Lutsevych, research fellow and manager of the Ukraine Forum at Chatham House, joins us. Plus, later today, don't miss our special supply chain pain. We're live from Micron's headquarters in Boise, Idaho. It starts at 2 p.m. in New York, 7 p.m. in London. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on Bloomberg Radio and on Bloomberg Television. I'm Matt Miller here with Kailey Leinz in New York, Anna Edwards in London. We're watching oil very closely today because, it was very interesting last week to see it come down, and that was on optimism that Iran would fly through the nuclear talks and eventually put some more supply on the market. But today, even with that optimism out of Iran, you still have the pessimism of a Russian attack in Ukraine pushing us up to $100 a barrel. And we're very close to that. In fact, at one point, I think we were at $99.50. If you look at this GIP chart, that's what we're seeing. Let's bring in Koku Agbublua right now, who runs research out of the UK for Soc Gen. Koku, what do you think about the move higher in oil? In fact, Anna was speaking to a strategist early this morning who said, even with Iran putting more supply into the market, we could see 110, 120 on Brent.
Hi, Matt. So I think it is clearly pricing in a lot of risk premium, but it is what I find interesting is the asymmetry in terms of the distribution of outcomes. Clearly, if you look at the decision tree and if things were to get worse, it's very difficult to price how high the oil price could get in terms of the sort of negative feedback loop or the convexity embedded in such a tail risk scenario. So yes, 110, 120. I think what's interesting, however, is how long the oil price can stay at these very high levels, because it will start to destroy demand. You have to remember that we have had a pretty strong rebound in terms of consumptions because of the excess savings accumulated since the crisis, so close to $2.5 trillion in the US. That's 10% of GDP. So all of that is going to lose momentum as these prices start to hurt demand, particularly when central banks are looking to hike interest rate to fight these inflationary pressures.
Koku, when you look at the assets that are in focus for you at this point and all of the volatility surrounding geopolitics, you try to work out what is the most likely outcome, have a base case scenario, or just plan and prepare for a number of different possible outcomes here?
Yeah, I think the base case scenario is clearly is that no one's really wants to have a full-blown war or conflict. So I think the base case scenario is to find some sort of a compromise through sanctions that won't be too aggressive, because you have to realize that 40% of the gas in European markets provided by Russia. There's obviously a lot of second and third order impact in terms of the financial system and all the discussion that were around Nord Stream 2, etc. So even from a Russian perspective, the impact on its economy of very brutal sanction could be quite deleterious. So we still find a base case scenario of some sort of negotiated agreement whereby things don't go further from where they are today. And at that stage, you could see a normalization in risk assets.
But if you're looking to hedge against any potential further conflict, Koku, where's the best place to do so?
Well, I think volatility in currencies is clearly the asset classes that has lagged if you look at equity vol or commodity volatility. So we find currency vol across dollar yen or euro dollar, etc., as the asset class that gives you the highest convexity going forward from here.
If you assume that things will eventually work out in Russia, Ukraine, at least with regards to commodities prices, does this represent a buying opportunity, Koku?
Well, I think commodities prices are going through their own dynamic when you think about greenflation, for example. So copper, lithium, aluminum, etc., are seeing significant demand because of the energy transition. And this is a multi-decade trend. And I think that is a sector that is clearly has a lot of opportunity going forward. So I don't think the sort of end of this crisis is going to necessarily mean a significant normalization in commodity prices.
Koku, just briefly, does this change your thinking about the Fed, the ECB, the market pushing out expectations a little bit for hikes, even though this could be inflationary?
Well, yes, I think it doesn't really change the dynamic, because we already have very high CPI, and this crisis is making things worse in terms of input cost inflation potentially. So I think central bank will have to normalize monetary policy and won't necessarily change the game plan. What it means, however, is that we have a risk of stagflation potentially, i.e. growth essentially being hit quite hard at the time where inflation could remain more resilient. So I don't think the rates hike are likely to sort of cure the inflation virus, so to speak, in the medium term. So we are heading towards a pretty complex situation with government debt to GDP very high, limited fiscal stimulus, and at the same time, we have tighter monetary policy.
All right, Koku, we have to leave it there, but thank you so much for joining us. That's Koku Agubloa of SocGen. Now, we do want to get to some breaking news out of Hong Kong. Chief Executive Carrie Lam is speaking and extending virus curbs until the mid to end of April period. She also says Hong Kong will do compulsory universal testing within 3 months as it deals with its unprecedented outbreak. We'll stay on top of that, geopolitics, and the markets. This is Bloomberg.
This is Bloomberg Surveillance Early Edition, and here's what you need to know. Vladimir Putin raises the stakes in the confrontation with the West. The Russian president officially recognizes 2 self-proclaimed republics in eastern Ukraine, and he orders what he calls peacekeeping forces to move into the regions. At the United Nations, the US leads the condemnation of the Russian move. Both the US and UK say they'll impose more sanctions, and European Union ambassadors are meeting to consider their own penalties on Moscow. Hsbc has stepped up plans to return billions to investors. The London-based bank announced a share buyback of up to $1 billion. That's on top of an earlier $2 billion program. Meanwhile, US regulators are investigating HSBC over bankers' misuse of services such as WhatsApp. That seems to be a story that is getting through to a number of global banks. We'll keep across that one. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And of course, geopolitics really front and centre yesterday in Europe and now today with the US back in play, Matt.
Yeah, absolutely. We don't see quite as big a move in U.S. futures right now. Maybe we will later if the U.S. and Europe really do impose heavy sanctions on Russia. But right now, S&P futures are down about 0.5%. This, it has to be said, pales in comparison to the drops that we saw on European indexes yesterday or this morning. So not quite as sharp a move. The U.S. dollar index is down, which is interesting because the dollar had been really the safe haven currency. But the Bloomberg U.S. dollar index, if you've been following it, 1174 is not a very high level here. And you don't see strength in the Swiss franc, and you don't see strength in the Japanese yen either today. So there's not exactly a flight to safety. The same can be said for bonds, although you do still see some buyers in treasuries right now. If you look at the chart, it just goes up and to the right. 191.13 is a relatively high level compared to what we saw, just a few hours ago, for example. And Bitcoin is also up now, more than 1%, 37,457. It has to be said, a really steep drop from what we saw. The highs of last week, we were up to 45,000 already, right? Now we're at 37,000. However, the gain, we've seen these gains, preempt gains in equity markets earlier, as it tends to be kind of a risk indicator lately. Kailey, what do you see in terms of pre-market movers?
Well, there's a lot of things moving on the macro story, Matt. One thing you didn't mention, oil. WTI is back above $95 a barrel. You also have natural gas prices moving to the upside as well, and that is translating into related equities and pre-market trading. One of them being Cheniere, a big LNG player. It's higher by more than 7%, and you have energy companies like Apache moving higher as well, even though, interestingly, it reported last night, even though the U.S. was closed for a holiday, it actually missed expectations on profit, but it is benefiting from higher oil prices this morning and moving upwards to the tune of about 6%. To the downside, though, Bitcoin-related equities, you were talking about the steep declines we've seen over the last few days, even though U.S. stocks were not trading, so maybe playing a little bit of catch-up when it comes to that move. Coinbase is down about 4%. And then Yandex, of course, the Russian internet giant listed here in the U.S., really tanking on the back of all of these geopolitical uncertainties, Anna, with the moves we saw from Vladimir Putin over the long weekend. Yandex is down about 16% at this point.
Yeah, and those geopolitical uncertainties very clear in Europe yesterday and to some extent today then, Kailey. To Matt's point, we saw heavy selling of European stocks down by more than 2% on some of the major markets in yesterday's session. Today, we opened up in negative territory and we have been down more than this. So we're down by 0.4%, but we're off those lows earlier on in the session, pausing for thought, waiting perhaps to get a little bit more detail on the West's assessment of how severe an infraction we're seeing here from Russia and what will therefore be the sanctions that are imposed as a result. We've got the Russian equity markets under pressure, once again down by 5%. Yesterday they were down the most since 2008, so a big loss on Russian equities, a big focus on Russian banks, and the negative moves in Russian banks in yesterday's session clear to everyone to see. Brent crude is up by 3% this morning. We've been above $99 a barrel, as Matt said earlier. I spoke to an analyst at JP Morgan earlier who was saying, yesterday in fact, he was saying that 120, they could easily see that for oil prices, even if we see an Iran deal, but if we do see tanks start to roll on the Russia-Ukraine border. Volkswagen is up by nearly 9% in this morning's session. This is a totally different story, but important to keep our radar on some of these interesting corporate stories today. Confirmation from the companies, confirmation from Volkswagen that it is talking to Porsche about some kind of IPO of that business. The Porsche listing we see at the moment is not to do with the sports cars. This would be to do with those sports cars and trying to unlock some of that luxury value, perhaps. Now, let us get back to the geopolitics, back to the situation in Ukraine. The former Finnish Prime Minister Alexander Stubb told us this morning that Putin needs to be hit hard with sanctions.
I do think this is actually an invasion. And if it's an invasion, I think the sooner the sanctions are on the ground, the better. And I do think that Putin needs to be hit hard, because otherwise he'll continue this type of behavior.
Alexander Stubb there talking to me earlier, the former Prime Minister of Finland. More now on this subject. Orysia Lutsevych joins us, research fellow and manager of the Ukraine Forum in the Russia and Eurasia Programme at Chatham House. Orysia, thank you very much for your time. So clearly the view of the former Finnish Prime Minister is that this is an invasion. This already meets his definition, his criteria. What do you think the consensus will be in the West as to whether this is an invasion already?
Well, my feeling is from what we see about the statements from the United States, from the EU at this point, that they definitely treat it as an act on aggression on Ukrainian territorial integrity. So this is apparently one stage in Putin's playbook to unleash further military incursion into new Ukrainian territory. What happens with the recognition of these quasi-republics that Putin has initially occupied in 2014 is that Russia now officially recognizes that its troops are there, because previously Putin was denying. And if this is the case, if Russia officially recognizes the presence of its troops, it's an act of aggression, because it acted upon the false pretext of humanitarian disaster and false flag operations accusing Ukrainians of threatening civilians in those territories, which did not happen.
He can also now, I guess, put military bases there. I mean, isn't this essentially Russia annexing more territory from Ukraine?
You're absolutely right. And you see on the map you just showed how Ukraine is surrounded from the north, from the south, and in the east. Donbass and the parts in the east are just one of the possible staging grounds on military operation. Yes, Russia has de facto already annexed this territory by issuing over 800,000 Russian passports illegally, by annexing assets of Ukrainian companies, by circulating Russian ruble, by even being ready to pay social payments to people there. So these new treaties between Russian Federation and these quasi-statelets basically allow Russia to build new military bases on the territory of Ukraine.
I should add that Vladimir Putin says he is not annexing territory, just as he said he would not. Russia had said they would not invade Ukraine. Just to be clear, although we all see what we're all seeing, right? Is it possible, Orysia, that the West, that Europe and the U.S. are going to enact slightly lighter sanctions on Russia as a result? Is this maybe giving them a way to continue buying Russian gas and oil and not make such heavy-handed moves to shake up the global paradigm?
Well, I think that the United States is quite aware of the playbook of Russian further actions. And it seems like Russia is progressing along the lines of invasion. I mean, I think personally the sanctions that were signed yesterday in the executive order are not appropriate. They are too weak. They only sanctioning entities doing business in those occupied territories, which nobody honestly does. But I think that we have to be very clear that sanctions is just one way to support Ukraine. Another one is directly to boost Ukrainian economy, is to set up special resilience fund, as President Zelensky was urging, and also arm Ukraine to mount resistance to a possible new incursion of Russian military into Ukrainian territory. So they have to go hand in hand, punish the perpetrator and support the victim.
Well, and Orysia, it's not just about what is happening currently. If you listen to Vladimir Putin's remarks yesterday, his tone, his approach to history, saying that basically Ukraine, other states surrounding Russia are just Bolshevik creations, they shouldn't be independent states. Is this going to be an eternal issue so long as Vladimir Putin is the leader of Russia?
Well, absolutely. It's unfortunately Putin's sick fixation on the fact that Ukraine belongs to Russia. It's this new imperial sense of entitlement for what he sees the ancient Rus, the origin of Russian state. But let's be honest also, Ukrainian national state was always a disturbance to both Russian Empire and then Soviet Union. So Putin is here to fundamentally crash Ukraine. This is what is the threat to Putin. It's not about NATO enlargement. It's about democratic, prosperous, rule-based Ukraine that is in a way a window of that democracy and fresh air into Russia. That is why he's so determined to deny Ukraine the right for its existence and so determined to wreck it.
Orysia, thank you very much for your analysis. Orysia Lutsevych, Research Fellow and Manager of the Ukraine Forum in the Russia and Eurasia Programme at Chatham House. Thank you very much for joining us. Coming up on the programme, we'll get back to the earnings story, but we'll stick with commodities. We've been talking a lot about commodities for geopolitical reasons today. We will talk about copper with Ivan Arriagada, CEO of the copper mining company Antofagasta. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Council on Foreign Relations President Richard Haass. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. We do want to take a quick check on the markets because we have seen a pretty significant turnaround underway. S&P 500 futures are now in positive territory, up about 1/4 point, but still a sizable move nonetheless. NASDAQ 100 futures right now are only off by about 0.4%. You're seeing some movement in the bond market as well. The 10-year Treasury yield back up to 192 is essentially flat after being down as much as 7 basis points earlier. And you also are still seeing, though, oil clinging to its gains. WTI crude is trading up more than 4%. $94.94 a barrel is where we sit at the moment. And speaking of commodities, let's turn to the earnings of one commodity player. Chilean copper producer Antofagasta says it will hand back more than $1 billion to investors in dividends. That's after becoming the latest miner to cash in on surging commodity prices. Joining us now is the CEO of Antofagasta, Ivan Arriagada. Ivan, obviously a very big year for you. Your profit more than doubled in 2021 thanks to higher copper prices. Where do you see prices going from here?
I think that prices will probably trade mostly sideways from where we are today. I think the prospects and the fundamentals on demand are positive. I mean, we're seeing that on the back of economic recovery, and also on the fact that there is increased use and demand for copper for electromobility, renewable energy, and generally on anything that has to do with fighting decarbonization and climate change. So we see a positive market from the point of view of the fundamentals. Now, certainly with the condition of potential hot war that we're sort of witnessing these days, that will bring more volatility. But beyond that, the fundamentals of demand are positive for copper.
Yes, let me ask you about geopolitical tensions, Ivan. Clearly not necessarily something that's going to impact your business very directly, but given commodities more broadly, not copper, but maybe nickel and other commodities, more broadly attached to the fallout from any tensions between Russia and the West, what are you sort of bracing yourselves for? Or do you just expect that this will bring about higher commodity prices and that's something the business benefits from?
Look, I don't think that we benefit certainly from a situation like this one. I mean, there will be more volatility, and it's a hard call to guess whether copper price, or for that matter, commodity prices will go up or down. I think there will be short-term, probably could be more demand for certain metals, but on the other hand, because of trade disruptions and the like, growth is likely to suffer. So I think on balance, the equation is certainly negative from these geopolitical tensions escalating.
Okay, so that's the negatives. Let me talk to you about something else, and that is the political situation in Chile. A lot of people concerned, those who are exposed to the mining industry at least, concerned about what they're seeing there, about talk of nationalizing the mining industry. Do you get any sense of how far that kind of talk goes and becomes action?
Yeah, I think there are two main things happening in Chile. One, there is a new government coming on board on 11 March. This is a left-wing government. It's a new generation of politicians. But one of the good features is that recently they've named the finance minister, Mario Marcel, who is actually a former central bank president, which talks about the sort of moderation and view that the likely incoming government is expected to have on the economy. So that, I think, it's something which, from that point of view, we're not, we see as a positive sign. On the other hand, there is a mandate to rewrite the constitution or write a new constitution, which is a process that's unfolding. It's taking place as we speak, and it's early days in which some of the working commissions are submitting their work for a plenary vote, which needs a 2/3 majority for it to be approved. And then the final constitution in July should be subject to a plebiscite or a referendum or popular vote. I think we're seeing some of the work from these commissions being not, certainly business or mining friendly. We think, those would certainly not promote the industry and the sector and not contribute to economic growth and prosperity. But they have still to go through, as I say, the plenary vote and discussion. So there's still some way to go. I think this is a unique opportunity for Chile to try to build a new social pact if it's done well. But it also, could be or could end up with a bad result. So it's a very important time living in Chile right now.
So do you think in the end, at least from your perspective, cooler heads will prevail? In this country as well, we often see a lot of promises before an election, and then when it comes time to legislate, it's very difficult to pass any of those issues in the new agenda. Does that seem to be the case in Chile as well?
Look, I think here it's more than just a change in government. It's about, writing a new constitution, which is redefining some of the institutional framework that Chile has had for many years. I think there is a call and a need for reform, especially in terms of promoting a social agenda which is more progressive. So I think there will be changes to taxation and other factors. But I do think that mining and generally business, should play a significant part in this new social pact. And I think that, remains to be seen, to have the sort of full recognition that we expect it should. But we think that moderation, therefore, is something that's key in the stages that come, in the plenary sessions, and then finally in drafting the final version of the Constitution. So we do certainly want that to happen so that we have a balanced constitution that allows the country to prosper and to continue to grow and benefit all citizens.
Ivan, thank you very much for your time. Good to speak to you. Ivan Arriagada, the Antofagasta CEO. Now, later this morning, we'll discuss the oil moves with Energy Aspects Chief Oil Analyst Amrita Sen, joining the team at 8:30 a.m. New York time, 1:30 p.m. in London. This is Bloomberg.
I know people say that there's no end in sight. I wouldn't exactly say that. I would say that a lot of progress is being made. And, we're thankful for all the partnership across the supply chain, and we're going to continue to drive more and more supply.
We've gone from maybe 4 or 5% growth to almost 20% growth last year. However, we still expect that through 2023 that we're still going to be facing supply shortages.
When we think of the industry and the capacity it's putting on, I think you have to take one big step back. We're an industry that's about $500 billion, and it took 50 years of capacity to become a $500 billion industry. This industry is going to double in the next 8 to 10 years. It's not just Tom Caulfield's point of view, it's pretty much the consensus view.
Executives there from AMD, Intel, and Global Foundries talking about the challenges they're facing with the supply chain, specifically when it comes to chips. Stay tuned for Bloomberg's special coverage, Supply Chain Pain. We are live from Micron's headquarters in Boise, Idaho. That starts at 2 p.m. New York time, 7 p.m. in London. And it's really been, obviously, one of the biggest focuses, certainly for me as a lover of things that are built with chips, for my radio co-host Paul Sweeney, who's still confounded by the shortage, and for Tom Keene, co-anchor of Bloomberg Surveillance. He joins us now. Tom, what do you think? This chip shortage is just unbelievable. I guess it's just that we're all buying much more stuff than had been expected, and investment CapEx wasn't enough in the previous years.
I stood in a small room, Matt, with Kenneth Rogoff of Harvard University 19 years ago, and he told me what would confound Western business and finance was logistics. And that's what this is really about, is finally, for whatever set of reasons, the logistics battle is on us, and everybody's guessing the x-axis. Right now, Matt, the x-axis is the market reaction to what we have witnessed this weekend on the continent of Europe. One of the litmus papers here is the VIX. This is the volatility, if you will, of the Standard & Poor's 500. We go back way pre-pandemic to a level of 10 and then up to a very sustained level, call it 16, maybe 15. And then we blow out to the pandemic number and come down. And Matt, 30 is sort of the pain threshold over the last 2 years. And we're there right now. We were above 30 an hour and a half ago. Right now, 29.47 on the VIX.
So, but I wonder, Tom, is this move by Russia, do you consider this a surprise? Does it offer uncertainty? These are things the market doesn't deal with well. Or was this expected? And is it going to happen in a kind of smoother way than even we could have predicted?
Well, nobody cares what I think, but what I will do is read the zeitgeist. And the zeitgeist is Robert Kaplan in the Washington Post last night. There's a number of Robert Kaplans. It's a little confusing, but this is the arch-European expert at Brookings. And Robert Kaplan makes very clear, Matt, this is about oil. It's about the major linkage here into the Baltic Sea and into what Mr. Putin desires, and we don't know what he desires, but the major litmus paper will be oil up to 99.50 Brent crude about 2 hours ago.
All right, we're watching that very closely. Of course, we'll be watching surveillance as well. Tom Keene, co-anchor of Bloomberg Surveillance, thanks very much for joining us. Anna, it strikes me that maybe something doesn't have to be a surprise to create, ripples around the globe, like what we've seen in Ukraine. We all expected, or at least the administration was warning it could happen, and it did. The same is true with Volkswagen.
Yeah.
We've all been watching for a Porsche IPO, and now it looks like they're actually going to do it.
And the stocks moved on both of those stories. Yeah, it's interesting that Russia had said for a long time it wouldn't recognize these states or was considering it, but then the Duma voted and requested that the president did so. And now we know what has happened, and he has. Markets respond. This is Bloomberg.